Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
The upcoming economic calendar has a lot in store for traders this week, with the potential to impact global markets. The Federal Reserve is expected to increase rates by 25 basis points at its next policy meeting, despite acknowledging the increased risk of a recession later this year. After the recent financial sector turmoil, traders have a final chance to hear from Fed officials before they enter their traditional blackout period ahead of the meeting. The US is also due to release data on existing home sales, manufacturing surveys, and the weekly report on initial jobless claims. PMI data will also be released by the Eurozone, the US, and the UK, which will be a significant driver for the markets as central banks approach the end of their tightening cycles. Furthermore, don't miss out on the opportunity to win a limited edition branded mug. All you have to do is like this video and comment the answer to the question. What is the name of the Central Bank of the United States? Is it A. JP Morgan Chase, B. Bank of America, or C. Federal Reserve? Make sure to subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar index bounced off a one-year low after some March retail sales components were not as weak as economists had feared, while a key Federal Reserve official warned that the US Central Bank needs to continue hiking interest rates to bring down inflation. The dollar rebounded after data showed US retail sales fell more than expected in March. Let's take a look at the analysis today on USDZAR. This currency pair is currently within the primary support zone. So if we break back above the support zone and close around that 18.15 level, we could see a rally all the way back up to those high points. However, if we break below the support level and close around 17.96, we could see a sell-off back down to those lower levels. Moving on to Wall Street. First quarter earnings season will hit full stride in the coming week, with results expected from several big banks including Goldman Sachs, Morgan Stanley, and Bank of America, plus a long list of other companies including Netflix, Tesla, IBM, and Johnson & Johnson. Analysts now expect the S&P 500 earnings to have declined 4.8% in the first quarter from the year-ago period. So let's shift our focus to the S&P 500 analysis. The US 500 is just above that primary resistance level. Should we get a close above 4,160, we could see a rally all the way back up to the top of the channel at 4,240. In commodity news, oil markets rose for a fourth consecutive week, riding on global energy agency IEA's upgraded demand for prospects for 2023. Although gains from Friday were cut by a resurgent dollar, which is usually bearish for commodities, crude prices lost much of their upward momentum after Federal Governor Waller's remarks favoring more rate hikes. Higher rates tend to benefit the dollar and weigh on oil. So now let's take a look at the analysis on crude oil for today. This commodity is currently within a tight spot. If we get a close above 83.15, we could see a rally all the way back up to 84. However, if we get a close below 81.75, we could see a drop back down to 81. Lastly, let's finish things off with gold. The price of gold settled at $2,004.26, down $35.85 or 1.8% on Friday after the dollar ramped up from a one-year low, handing those long on the yellow metal their biggest loss in 3 weeks. The price of gold got to a low of $1,992.46 during the session. Until Friday's abrupt turn, gold bulls had one of their most euphoric runs in under a week, gaining more than $50 or 2.6% in just 3 sessions between Monday's close and Thursday's settlement. Looking at the analysis for gold today, we have a major chance that this is going to come back down to that primary support level at 1,998 before we could potentially see a rally in this specific commodity again. However, should we get a close above 2007, there is a possibility for us to see those high points at 2020 again. Additionally, if we come back to the primary support level and break straight through and close around that 1,993 level, we could see a further sell-off on the yellow metal.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.